Hey guys, good morning, good morning, good morning. Today we're going to talk about retirement planning, right? And understand a little bit more about retirement planning and why we got to plan for this, right? Just give me a second here. Let me just send out a few invite. Now reach out to a few folks. Let them know that we're talking right now. Give me a second. All right. Good morning, good morning. Good morning, good morning. I hope we're having a blessed day. Good morning, good morning, good morning. Like I said, today we're going to talk about retirement planning and the importance of it, right? Why must we plan for retirement? And how do we go about planning for retirement? Because retirement planning is something that we have to do. It's something that we have to work on. It's something that we got to work towards. It's something that we have to prepare for. Because if we don't prepare for retirement planning, how are we going to retire? Right? So welcome on, welcome on. We're going to talk about retirement planning today. All right? We're going to talk about retirement planning today and the importance of retirement planning. All right, so if you're just coming in, just comment where you're from. Comment where you're from, where you're representing. Comment where you're from. All right, come on in, come on in. Remember to comment where you're from, represent where you're from in the comment section. I'll give you a shout out. All right, represent where you're from, comment where you're from, guys. All right, I want to give everybody a shout out as we talk about retirement planning. All right. Because this is something important. We got to talk about this, right? We got to talk about retirement planning. Because if we don't talk about retirement planning, how are we going to represent and how are we going to plan for the future, right? So the big issue with retirement planning is that no one ever teaches us how to plan for it, right? Nobody didn't teach us how to plan for retirement. Someone just said, put your money here, right? And it will be there for your retirement. But retirement planning is something that should have been done before you even got a good job, before you start to go to school, all of that, right? Retirement planning is something that should have been done early in the game, right? Early in the game. But no one ever teached us, man. No one ever teached us. So, things like knowing what's your FIN number, right? Knowing your FIN number. Knowing things like 50, 20, 30 budgeting formula, right? Understanding how to create a financial foundation. Understanding the wealth formula. Man, we should have learned these things before we got in the game. But let me tell you something. We got to go back in history, right? In history and talk about where did retirement planning come from? What's this whole idea of retirement? How was it structured? How was it put together, right? So we got to look back in times like in the 1920s, right? In the 1920s and even before that, because pension plan was the first format of retirement plan, right? Pension. A company will give you some form of pension, right? And many of us know our grandparents, or many of you have parents that have pension, right? There was a time where you worked for a job from, let's say, 25 to 65, give this company 40 years of your life, and then they'll pay you a pension after when you retire at 65, and that pension will be paid to you until you die, right? That was the old days, right? And then you have Social Security, right? Because remember, Social Security wasn't always a thing. This was created in the 1940s. Right? So Social Security is something that was created in the baby boomer era, right? So that's how the whole pension, so this whole idea, right? This whole idea, a mindset that, hey, my job will give me money for retirement and I will also have access to a Social Security is the way we think, right? And millions of Americans today, millions do not have a pension. And the only source of income they have coming in retirement is Social Security. But here's the thing. I want to give you a message today, right? Because we're going to talk about how you plan for retirement. But I'm going to give you a message today that is on the Social Security website. If you didn't know, go to Social Security website and look at their plan and type in Social Security exhaust, right? Social Security exhaustion. And you'll see on their website, they tell you that Social Security will be exhausted in 2000, and if I remember correctly, 35 or 37, which actually represent the last year the baby boomers turned 65. Because did you know that the baby boomers, right? I want you guys to catch this, man. I want you to catch this. Did you guys know that the baby boomers, right? Every day, there's a group of baby boomers that turn 65, 10,000 of them. 10,000 baby boomers turn 65 every day, right? Every day. How many of you guys knew that? Right? Comment if you knew that. Remember, if you're just coming in, comment where you're coming in from. Represent your state, represent your country, right? Because I have friends from all over the world. So represent where you're from. So the thing is, if 10,000 baby boomers turning 65 every day, and this is going to happen all the way to 2035, what does that mean for Social Security, right? What does that mean for Social Security? What does that mean for Medicare, right? All of these things mean that we're in trouble. We're in trouble. They can't keep up. Because why? Let me show you what happened to Social Security if you didn't know how Social Security works. There's a thing called, if I remember correctly, FICA, right? Which is where they take money from your paycheck, right? And then they distribute it to different things, right? But some of that goes to Social Security, right? So that's the money that you have put into. So people think that Social Security is a government thing. No. It's you. It's you. It's your money. You contribute money into the Social Security program, which means that money is supposed to be there for you when you're ready for retirement. But what happened is that there's not enough people, okay? There's not enough people in, the workforce. There's not enough people contributing into the 401, the Social Security plan. Because why? There's not enough jobs. There's not enough people working, right? So our economy is facing big problems in that department. So there was a time where for every one person that retired, right? There was a time where for every one person that retired, there was 40 people working in the workforce, right? So every time there was one baby boomer that retired, there was 40 people working. So that's how they were able to sustain this whole Social Security program and how it was working. But today, that number shrink dramatically shrink. Now for every one baby boomer that's retired, or anybody that's retired, there's only about 3 people in the workforce that is contributing for everyone that retires. Think about that. That thing went from 40 plus to now 3, right? To about 3 people. So what is that telling you? That's telling you that Social Security having a big problem ahead of them. And they already put it on their website. It's not my words. It's not my opinion. It's they put it on their website. Go to Social Security website. Right? How many of you guys ever saw that? Right? I would love for you guys to comment. If you went on the Social Security website and you saw where they said that Social Security will be exhausted in 2000, if it's not 2035, I believe it's 2037. So I know many of us is dependent on Social Security. Many of us have Social Security in our planning. And let me tell you something, millennials, because I'm a millennial. Right? I am a millennial. I'm young. I'm part of that whole movement. So I'm a millennial. Baby boomers are people that was born, a particular time. Generation X, right, is a particular time. But baby boom, millennials is anybody that's born after 1980, right? After 1980. So we're the millennials. Millennials, don't even think about Social Security. Don't even put that in the back of your head. By the time we are ready to look towards that, You have a better chance of seeing a UFO. You have a better chance of seeing a UFO before you see a Social Security check. All right? So don't even put that in your retirement planning or dependency upon Social Security. So that's why we always joke around and we call it Social Security, because it's in the air. You don't know if you're going to get it. You don't know if you're going to qualify for it. You don't know what happened. Do you realize that they're raising the retirement age up? Do you realize that? Do you remember when retirement was the age of 62? Right? Do you remember that? Do you guys remember when they moved it up to 65? And then now they moved it up to 67? And there's even talks. There's even talks of moving up the retirement age to 72. Why is this? Why is this? It's because of the fact that people are living way longer today. People are living way longer. And because they're living way longer, that means that they can work longer, right? So this is what's going on. So what must you do, right? What must you understand before this, right? Before you go to school, before you go to a good college, before you find a good job, what must you understand if the end goal? You got to plan for the end in mind, right? You got to plan for the end in mind, right? So if you know that your job, your goal in life is to go to school, get the good grades, go to a good college, to get a good job, and then retire, right? If retirement is your plan, then you got to plan for the end in mind first. So here's the first thing you should have learned. You were supposed to learn your FIN number, right? You were supposed to learn your FIN number, guys. How many of you know what's your FIN number? Comment if you know your FIN number, all right? If you've been on these calls with me so far, then you should know your FIN number. But if you don't know your FIN number, it's not a bad thing. So I'm going to teach you how to do it, right? Because people charging people a lot of money to teach them this knowledge. I give it away for free. I give it away for free. As a matter of fact, I even give you access to free workshops, Monday through Friday, right? Monday through Friday, I give away free workshops. If you want free access to free workshop, just comment the free, right? If you want free, I will inbox you the link, because I'm not going to post the link publicly. But if you want access to the free workshop, just comment free, right? And I'm going to give you access to the free workshops. So here's the thing. Here's the thing. We got to know our FIN number, right? And let me tell you what's your FIN number. Your FIN number is your final income number for retirement. Like I said, tag a friend right now, man. I'm about to drop some jewels. I'm about to drop some jewels. All right? You're about to walk away. This is me sitting, literally, whoever is on right now, this is like me sitting down with you and helping you understand how to plan for your retirement. So tag somebody, share this with somebody. I'm about to drop some jewels. This is Mr. Finance talking. I'm about to drop it. You ready? Get your pen and paper. All right, let me give you a second. Get some pen and paper. Get your pen and paper, man. I'm about to show you how to do it. All right, it's not hard. Don't let nobody tell you that it's hard. It's easy. And I'm here to tell you, I'm about to get rid of all the confusion. So get a pen and paper right now. Get a pen and paper. I'm giving you time, because I don't want you to miss out this information. Comment ready, right? Comment ready right now. If you're ready, comment ready, right? Because I'm about to drop jewels. All right, here we go. This is it now. If you want to know your final income number for retirement, here's what you got to know. You got to know what's the now, you got to know the later, and you got to know the end. So when you're writing it down, here's what I want you to do. Follow my finger. On your paper, I want you to write no, now, right here. Underneath now, give it a couple space. I want you to write later, right here. And then on your paper again, underneath that, give it a couple more space. I want you to write end down here. All right? So now, later, end. All right? Write that down on your piece of paper right now. All right? I'll give you some time. Write it down. So now, later, end. All right. Now that you know that, here's the numbers you got to know. When it comes to the now represent your current age. So whatever your current age is, write that down next to now, right? So write it down next to now. So now is right here. Write your current age right here next to it. All right? Now the later represent when you want to retire. So write down the age that you want to retire. Write it down right here, right? Write it down right here. All right? So you got that. So now is your current age. Write down your current age. Later is the retirement age. Now the end is what we call the average life expectancy for somebody. So right now the average person is living to around 85. In the US it's a little bit lower, it's around 79. But we're gonna put that the average person, the average person live to around 85. So the end is where the life expectancy for someone, which is 85 years old, right? So you're gonna put 85 next to the end, all right? So that's what you write down there. So now is your current age, later is your retirement age, and the end is your average life expectancy that you live to. So 85 is that number, all right? So you're gonna put 85 there. Now, the next thing you gotta look at is say, okay, now you got all the numbers, right? You have all the numbers. So let's just say, oh, sorry guys. Treadmill's kicking my butt. All right. So let's say that you got to figure out how much you want coming into you on a monthly basis for retirement, right? So the average person normally say, hey, Keon, I want $5,000 coming into me on a monthly basis, right? I want $5,000 a month coming into me in retirement. So whatever your money is, whatever your retirement money is, I'm going to show you, right? And whatever that money is that you want coming in later to you, then write that number down right next to your age. So if it's 5,000, 10,000, 20,000, write that down. I'm going to show you how to do the calculation. All right? So now you have all the numbers. You have all the numbers in place. You have the method in place, right? Here's the thing. Here's the thing. Now you got to figure out the numbers, and it's easy. So the first part you got to figure out is the later to the end. That's the first part. So let me give you an example so I could give you some numbers, right? Let me give you some numbers. Let's just say that you wanted to, let's say that you're 30 years old today. So that's being the now. Let's say that later you want to retire at 65. So that's for retirement age. And let's say at 65 you want $5,000 coming into you in retirement, right? Then you know the end is around 85 years old, right? Average life expectancy is 85 years old. So now, if I know I want $5,000 a month, which is $60,000 a year at 65, going into 85, that's 20 years I would need the money, because from 65 to 85, that's 20 years, right? You guys follow me? Right? Comment if you follow me so far, right? So from 65 years old to 85, right? You want money coming in for the next 20 years. So if it's $5,000 a month, that means it's $60,000 a year. So what you got to do? You got to calculate that. So if you need $60,000 a year for the next 20 years, take 60,000, multiply it by 20. That'll tell you that you need $1.2 million saved up by 65. Think about that. That means you need to have saved up $1.2 million by the age of 65 to 85 in order to know how much you're going to need, how much you need. So from later to the end, you got to figure out how much you need, right? You got to figure out how much you need. And that's how you do the calculation. But here's the other thing. How do you calculate how much you save, right? How do you calculate how much you save? So all you got to do, all you have to do is then say, hey, from age 30, right? Let's say that the average person starts saving for retirement at age 30. So from 30 to 65, you have 35 years to save. So since you figure out how much you need at 65, you're going to take that 1.2 million and divide it. All right? You're going to divide it by the 35 years that you have to save, which will then give you about 34,000 and some change that you need to have saved up a year, which is about 2,800 plus a month, right? So right there, you would know how much I need for retirement and how much I need to be saving or making in order to keep up with my retirement. So what am I telling you is that what most of you are going to realize is that you were set up to fail. You were set up to fail. You were set up to fail. Because if you knew your FIN number before all of this, a lot of the spending that you do, a lot of the lavish lifestyle that you're living right now, you wouldn't do it. You wouldn't do it because you know you had to save more. You wouldn't spend as much. But we live in an economy that encourages you to spend, spend, spend. That's all they encourage you to do. Spend, spend, spend. And because of that, we spend away our retirement. You know, one of the things I learned from a great mentor in his business, you know, and he told me, he said, hey, Keon, are you willing to live a lifestyle now that most people don't want to live, so that way you can live a lifestyle later that they can only dream about? Yeah, man. I'd rather people think that I'm broke. I'd rather look broke. I'd rather act broke. I'd rather say no. I gotta say that it's not in my budget, so that way I could live a good lifestyle later, right? I gotta plan for my retirement, right? It's either you live too long or you die too soon, and you gotta be planning for both of them, right? You gotta plan for both of them. So my question is, can you live a lifestyle now just to, you know, that you don't want to live right now, just to live a lifestyle later that people around you will only be able to dream about, right? Imagine that you could retire at 55 and never have to worry about money. Imagine that. Imagine at 55 you have passive income coming in, either from rental properties, from investment choices, right? Imagine that. Even having a business, right? You got to learn all these things. So what are the things that you must do, right? How do you get to budget and save for your retirement? Oh, man. You guys learn something, right? Let me see something real quick. You know, if I'm dropping jewels right now, guys, comment, man, I'm dropping jewels. If you think I'm dropping jewels right now, comment that, right? How many of you guys learned something right now? How many of you learned something right now? I hope you learned something. I hope I'm dropping knowledge for you, right? Now, let me teach you a budgeting formula, then I'm going to let you go, right? So, get your notepad ready again, right? Get your notepad ready, right? Get your notepad ready. I'm going to give you one more. I'm in a giving mood this morning. I'm in a really great mood this morning. And I'm going to give away a lot of stuff to this morning. So, how do you budget, right? A lot of us get this budgeting thing wrong. Oh my God, we got it so wrong. Let me tell you something, guys. Budgeting is not tracking spending. I'm going to say that right now again. I'm going to say this again. Budgeting is not tracking spending. All right? And I hope you guys understand what I'm saying to you. We cannot. Good morning, champ.
Good morning, sunshine.
Yeah. So, guys, you can't track spending. That's not budgeting. That's not budgeting. We can't do that. Right? Because the thing about that is that if you continue tracking spending, it's going to encourage you to spend. Budgeting is not tracking spending. I'm going to tell you that right now. Your budgeting, what you got to do is simply this. When you comes to your budgeting, you got to know two things. You got to know how much can you spend and how much can you save. And until you figure out that number, then you're not on a budget yet. Right? Because you got to know those two things. You got to know how much can I spend and how much can I save before you do either one of them. Right? So budgeting starts with you understanding a formula. And it's not something I invented. It's not something that I created. It's something that's been around. And it's called the 50-20-30 budgeting formula. See, these are the things that I teach. Right? I teach these things because if we learn them, we get to understand them. And if we understand them, then we could truly start living on a budget. So the 50-20-30 budgeting formula is where we get to understand two things. We got to know, for this formula to work, you got to know what's your net pay, right? You got to know what's your monthly net pay. And then you got to know what's your monthly bills amount or your monthly expenses. You got to know what's your total net pay and your total monthly bill amount, right? Once you know those two things, then you're ready to start running the formula. So, the formula says you got to take, your net pay and times it by the percentage for each box, and that will equal the amount that you need for your budget. Okay? So let me give you an idea. Let's say that 50% of your money should go towards your bills, right? 50%. 50% of your money should go towards your bills. 20% of your money should go towards savings. And 30% of your money should go towards your spending, or AKA your wants, right? But before you put away that 20%, before you start spending that 30%, you got to make sure that you take care of the bills first, right? You got to take care of the bills first. And once you take care of the bills first, then you're on track, right? So let me give you an example. Imagine that you have, let's say that net pay of $3,000, right? Let's say that your net pay is $3,000. Now, with a $3,000 net pay, that means that you would then, let's say that you have an average monthly expense of $2,400. You have $2,400 as your monthly bills amount, right? So it's easy to know your monthly expenses because that don't change a lot. You know, it really goes up and down. It kind of stays, you know, the same because your monthly bills don't change, right? Your income could change, but your monthly bills don't really change that much, right? So right off the bat, you see that, oh, I make $3,000, my bills is $2,400. I could pay my bills, right? I could pay my bills. So that's not the issue. Whew, man, 11 miles. So I tell you, try to do this live and the backpedaling is kicking my butt. Oh, guys, bear with me. All right, so when you have $2,400 as a monthly bill, and then you have $3,000 as a monthly expenses, it's easy to pay your bills. But the problem is not paying your bills is the problem because you're not working all your life just to pay bills. You want to have a lifestyle too. So now what you got to do is run the formula. So the first box is going to be the bills box, right? So you got to draw 4 boxes, literally like 4 boxes, right? Draw 4 boxes. And then each box is the rules box. You got to make sure you write down the rules. The rules is 50% go towards bills, 20% go towards savings, 30% go towards spending, and the formula is net pay times whatever. All right, so yeah, it's times out by the percentage that equals the money for each event. So the bills box is the first box. So you're going to take your net pay times it by 0.50, that equals bills money. So if you make $3,000 a month as a net pay, so that's the money that comes in after tax, you times that by 0.50, that gives you $1,500. So in this example, $1,500 doesn't cover your bills. 95% of Americans cannot pay their bills with 50% of their income. 95. Being a 5% is very rare, all right? It's a very rare thing. And if you're not part of the 5% group, don't feel bad because 95% of Americans can't do it. So don't feel bad about it. So now you go down to the savings box, and then the savings box says that, you know, net pay times that by 0.20, that equals money for savings. So if you make $3,000 a month times that by 0.20, that equals $600. So that's how much go towards savings. And then you go into the spending box, which is net pay times that by 0.30, that gives you spending money. So now if it's $3,000 times that by 0.30, that equals $900. So now you have $1,500 in the bills box, $600 in your savings box, $900 in your spending box. But you still got to pay the bills because $1,500 didn't cover the $2,400. The question is now you have an option, you have a choice. Where do you take the money from, right? Where do you take the money from? Do you take it from the savings box or do you take it from the spending box? Well, what I would advise you to do is you need to take that money from your spending box, right? And so that way you can add that $900 towards the bills, right? The bills box. Now you add that $900 plus the $1,500, you have the $2,400 to pay the bills. But in reality, most people take that money from their savings and continue spending. And that's why we start living paycheck to paycheck, because we didn't have a budget. We didn't know how much we could save and how much we should be spending before we did either one. So if you was to able to now save that 20%, that $600, you're not saving the whole $600 in a sense. You kind of are, but you kind of not. But you kind of live off a budget. So if you have 20%, you got to break down that 20% into 10, 5, 5. All right, that's the formula. See, that's the trick. Ah, man, I can't believe I'm giving away this for free. All right, 10, 5, 5 is going to be the secret number that you never learned. And like I said, I'm in a giving mood. 10, 5, 5. Never forget that number when it comes to your budgeting. If you're saving 20%, you got to break down that 20% into 10, 5, 5. What I mean by that, 10% should go towards retirement, minimum. 5% should go towards emergency fund, minimum. And 5% is the budget that you want to live on. But the question is, can you be disciplined and live on a 5% budget? So let me give you an example. If it's 20%, it's $600. 300 of that, because you got to break down that 20% into 2, so that gives you 300. So every 10% is 300. So 10% is $300 that you put towards your retirement. Break down the other 10% into two again. So now that's $300 split into two. That's $150. $150 will go towards your emergency fund, and $150 should go towards your monthly budget. So now you know that if I make $3,000 a month and I have a $2,400 monthly expenses, that means that my monthly budget, as far as spending, right, spending extra money, I have a monthly budget of $150. That's it. So you have two options. If you want to increase your spending amount or your budget, you have two options. It's either you lower your monthly expenses or you increase your cash flow. I vote for increasing your cash flow. Learn ways to increase your cash flow. All right? It's either through investments or start a business, right? And starting a business gives you a lot of tax advantages, or make great investment choices by learning your risk tolerance and tax tolerance, right? So I hope that helped you guys, right? I know I can't see your comments, but remember to comment where you're from, wherever you're tuning in from. I'll give you guys a shout out after I leave the gym. And yeah, keep winning, guys. I just hope these tips work for you. I gave you guys a lot of nuggets this morning. Man, let me see. I didn't even know how long I've been. 30 minutes of nuggets. That's pretty much one of my coaching calls. All right. So I hope this helped. I hope you replay it, share it as always. Tag a friend and say, hey, you need to listen to this. And definitely follow me on Instagram at Keyon Corniff, right? That's KEYONCORNIFFE. And definitely hit a like and a share. And definitely follow me on all social media platforms at Bishana's Legacy. And definitely get on my coaching program. All right. We'll make sure that we take care of you, get you hooked up, and start, helping you put together your financial foundation. All right. So keep winning, and the grind don't stop. I'll catch you guys later. Remember to put God first in everything you do, and He never steer you wrong. Always remember that you're one decision away from changing your future for the better. So always remember, the choice is always yours. All right? Be good, be great, and remember to never stop being awesome. All right. Have a blessed day, guys.